What's going on, everyone, and welcome back to another weekly review. Weekly review number 14. Two trades taken this week, both losses. It was my first week back live trading. And I think a good week because it was the second sort of full week of the month. First week is normally that accumulation week. So I think timing was good because I came back in when we normally either get that manipulation or distribution, normally manipulation after that accumulation. And yeah, the markets moved quite nicely this week. These are the two positions: EURUSD long, USDZAR short. EURUSD was a loss, but the narrative ultimately played out. The long I took was a bit premature, and that's the pair I'm going to focus on today, just because I think structure was really clear on this pair. I think in terms of what I look for on in this new ICT strategy, a lot of the boxes were ticked, and I think where I went wrong was clear just in terms of the timing of the entry. USDZAR, the bias was a bit off. But that pair ultimately ended up trading lower. But there was a mistrade on Friday that I was lining up because I had a buy shift over the course of the week. But yeah, I think just in terms of the boxes that were ticked based on my strategy and the criteria that I look for, and just overall how price distributed over the course of the week, just looking at the AMD cycle as well, EURUSD a lot cleaner. So just looking at EURUSD from a weekly perspective, we had this fair value gap here that had been mitigated and respected. This is very high time frame. Obviously, now we're playing within that weekly range. That was almost our ultimate sort of internal range liquidity, coupled with arguably this order block that formed here. And so that was a key area. We respected that, multiple wick rejections, and we started trading lower. From a daily perspective, it becomes a bit clear. In that weekly area, we had the manipulation to the upside, and then we displaced lower, breaking the structure, and then forming that gap as well as we broke the structure. Because on the 4 hours here at the open, we did gap lower, and we didn't fill that gap at that open, and we continued trading lower. So I think obviously from the high time frame bias, looking at how structured shifted lower, coming down to the 4 hour, the fair value gaps that we formed on that way down as we displaced, forming these one-sided fair value gaps as we came lower. The breaker, this was technically a break and structure gap, but we can just call it a gap. For me, was sort of indicating that we were going to fill this at some point in the week. And the fact that we were delaying filling it just sort of increased the probability of the bias that I was almost building, or the narrative rather. And so starting then to look for that counter trend trade, we had this order block that we traded into on Monday, and that was almost just an area that I was looking at for price to reverse from, but I obviously still needed criteria on the lower time frame to be ticked off to take that trade higher. So yeah, 4 hour order block mitigated, traded into it, started rejecting slightly. When I dropped down into the even the 1 hour, we had this run of liquidity on the 1 hour. We had the run of liquidity into the 1 hour. And I think this is where I started to rush the entry a bit. Yes, we did run that liquidity into the order block. And I think there was an element of FOMO that kind of started creeping in, feeling like if I didn't take the trade on the next pullback, even though from a minute 15 perspective, the shift of structure was never that clear. I was looking for this area to shift structure because we clearly failed to make a new low there or to run that liquidity there. So this was the area that I was looking out for. That's what I was still looking for before looking for an entry. And we started trading higher. I think obviously Monday was mainly an accumulation day. Trading higher. We kind of got into that area. Didn't yeah, I'll just pause that there. Didn't break that with a lot of conviction to the upside, but I argued on the day that look, we did close above that area, so I took that as a break of structure. And then identified where my internal range liquidity would be now that market structure shifted to the upside on the 15-minute and even the hourly. We had a small close above that level. So identified this two-sided fair value gap actually, and plotted that out as a point of interest for price to trade into. We got there very impulsively, and then stalled. The entry was on the 1 minute time frame. In this area there was a market structure shift, and then I took the entry to the upside with stops just below this fair value gap. And then that kind of played out, stopped me out. And I think then in hindsight, what was a bit clear on this pair was, I think both the weekly and the daily sequence in terms of quarterly theory and how price was distributing over the week, in that I didn't give that sequence enough time to play out, because on the day, obviously if Monday was an accumulation, then on Tuesday, I'm expecting that manipulation lower. And the manipulation lower did take place. Unfortunately, it stopped me out as it took place. But that order block ended up holding, and we failed to really close below it on the 4 hour, which was the time frame that it formed, mainly wicks. But what the 4 hour did was run the previous day's lows, which is, which I think characterizes the manipulation quite well, because that's, some call it a false breakout, but it's obviously just a manipulation in the sequence. We ran those lows, and then we started to trade higher after that. And so, I think while the entry was in the right area, obviously because of the time frame I took it on as well, the stops had to be tight. Otherwise, if I had stops way below this level or way below the low, it wouldn't have met that 2R criteria, or look, arguably would have even still stopped me out if I had my stops below that low. And so the entry, again, just premature. And in any case, the structure or the range that I was trading within had now been violated as we closed below this low. So that's from a weekly perspective. I bought the manipulation lower, so that was premature. So from a daily perspective, in terms of how the daily distributed, just looking at the true open on this Tuesday, again, if my entry was in this region here, stops just below there, and then take profit higher. What we saw on the daily was this accumulation over Asian session, low momentum, not really decisive, and then plotting out our range. We obviously had this is more London session, so we can, but I mean, we can call that really, even if it's that true open, the Asian high, and then our Asian low, probably at that point there. We then, after getting that true open, got the manipulation to the upside above that range, above the Asian high. And then after that, displaced lower to the downside. So we had the first part of the cycle, our accumulation. That point there was the manipulation higher, and then price distributed lower. And so the point at which I took my entry, obviously we have AMDX or XAMD. In this case, it was AMDX. The point at which I took my entry was either going to be a reversal or continuation or an accumulation. And I'm learning, looking at missed trades, looking at trades that I'm taking, that that's not a part of the cycle that I want to be taking my trades in, because I can never predict. Even though I have a high time frame bias, I can never predict what's actually going to happen in that part of the cycle. Um, Obviously, I was banking on a continuation or a reversal rather, because the high time frame bias was for price to reverse from this area. So I saw that as a sort of distribution lower, or into my area to then reverse higher. But to bank on price, manipulating or distributing within a 12 pip range is never ideal. I'd rather catch the distribution, because that's the primary area that prices that price is distributing in over that session. So from a daily perspective, I was too late. But in any case, my bias was wrong. I should have been short on the day, because then I would have caught the primary direction that price was actually heading in. So I think paying attention to time, especially the daily bias, I think sort of will help me time when to take my entries, or when I've missed an entry, or when perhaps I shouldn't pull the trigger yet, because price may be going beyond the point I've identified as my entry area. So I think while on a high time frame, the narrative was correct, because if we just let price play out and we see how it played out for the rest of the week, just focusing on this area, we can see the area was respected and we ultimately did head up higher. And I've logged a mistrade in this area. But while the narrative was correct, I think it's still there's there's an emphasis on timing that I kind of still need to get right, because the bias can be right, but if I can't get in at the correct area in line with how price is going to distribute, then it doesn't matter whether the narrative's right. You're going to keep catching L's. So price did ultimately then, after manipulating lower, distribute to the upside. And I think that was another sort of key lesson that I took away this week, in that while I was looking at this counter trend play as short term sort of move before price then distributed lower, I didn't consider that the sequence that was playing out, because what followed after that, yes, it did go as per the high time frame bias, but the AMD sort of sequence, especially over the time that the power of three normally does play out, was actually the counter trend move. And there actually wasn't an entry that I can confidently say I would have caught based on my strategy in all of this, even though that was the primary move that, or the primary direction that price was trading in. And so I think there was a key takeaway of focusing more on how price is developing in the moment, and detaching from expecting price to do something in a given period of time, or at least my given period of time. So there should have been more focus on, okay, price accumulated on this day, we need a manipulation. Okay, I've identified an area here to take a trade, but uh, you know if we're going to manipulate over this day, where are we going to manipulate to potentially? These lows were key areas that price was probably going to manipulate beyond, for us to get that run of liquidity before we then shot higher. There were a lot of confluences on the high time frame that supported that move higher. So this area as a potential point of for liquidity to sweep should have been sort of identified. And I think even looking at the entry area, and even on the 1 minute time frame, I've noted in my journal that it met the plan, but it wasn't a great trade, and I'd probably hesitate to take this position again if it did form, because of all the factors that I've listed. And so while this was a beautiful play, beautiful setup, it meets all the criteria: accumulation, manipulation, distribution to the upside. I think there's a lot of key takeaways from a timing perspective, and how I need to sort of be mindful of these areas, as prices developing. And even when I was logging this mistrade, it wasn't a type of entry that I'm very comfortable with taking. I mean, I noted that, even if this had to form, as much as it meets the plan, and I won't go through in too much detail now, but it was a long position to the upside that would have played out quite nicely. But again, it was a bit of an aggressive entry. Why? Because as I was back testing the mistrade, there were still preconceived notions of where price should head to and how it should play out instead of just focusing on how price is developing in the moment. And so, yeah, big takeaway this week is just focus on how price is actually playing out. Yes, the high time frame narrative very important because obviously you want to be on that side of the trade, but yeah, just not rushing into those entries is something that I think is gonna lead to big improvements in how I implement this edge, because focusing on what's working and starting to build better narratives is something that I'm definitely seeing as a continuing theme. But something that I'm seeing holding me back is forcing, those entries a bit too early from a high time frame perspective, but a bit too late from a daily sequence perspective. And I think having a combination of those two, understanding the daily sequence and how price is going to distribute on the day, coupled with, okay, where are we on the weekly? What have we done? Have we taken out key levels? Are we still going to manipulate beyond the level? Which way are we probably going to distribute towards based on what news events are still going to play out? I think a combination of those two is, yeah, it excites me in terms of how the edge is going to play out over time, if I can be mindful of those aspects of the strategy. So yeah, that is the weekly review. I think a lot of lessons to take away from EU, just going forward, and looking forward to yeah, how the rest of the month plays out. I think still on other pairs, EU's kind of come down lower quite nicely, and we're actually distributing quite nicely to the downside now. Obviously, from a weekly perspective as well, we're still targeting this external range liquidity. So I'm seeing price come lower down here. We are in this impulsive phase, so we'll look for obviously those pullbacks. Even on a 4-hour level within the week, pullback, continuation lower. So I think now that we are trading within this internal range liquidity, there's clear areas to target for those pullbacks and then continue lower down to that weekly target. And that's how I'll sort of be looking to capitalize on EURUSD for the rest of the month. So yeah, for daily updates, check out my trading view. Link is in the caption. And yeah, enjoy the rest of the weekend and have a profitable week.